you're going to make more money, but you're going to cash flow a lot more probably if you have a lower operating expense ratio. So explain to us what that is.
Yeah, so operation expense ratio is basically how much your expenses are. And so everything is based off of income. Whenever
Welcome to the Stephen Lee Thomas Show, where we provide expert advice for real estate entrepreneurs. And I'm your host, Stephen Lee Thomas. And it wasn't that long ago that I was navigating the challenges of real estate investing, learning from my mistakes, and building the business I have today. I created this show to give you simple, actionable, step-by-step strategies to help you do the same. Each week, we bring you in-depth discussions with industry leaders and professionals who share their knowledge and practical tips. So sit back, take notes, and let's dive into today's episode. Welcome back to the Stephen Lee Thomas Show. I'm your host, Stephen Lee Thomas. Today, my guest is Eric Lindsey. He has 6 years of experience in the multifamily space and has 136 units as a general partner. Eric, thank you so much for joining me on the show today.
Yeah, so it's a pleasure to be here. I'm looking forward to the interview and seeing if I could provide some value.
Awesome, man. I always like to start out, where are you calling from today?
Yeah, so on today, it's a little cool day here in Kansas City, Missouri. Maybe 50s, lower 50s. It's not really super cool today for the Midwest, but yeah, it's about 50s in Kansas City, Missouri, home of the Chiefs.
Nice, nice. I'm out in California. I live in Central California, so I think we're almost to 70 today. Maybe not quite, but weather's pretty good here. My next question is, where are you doing your investing at? Is it in your own backyard or someplace different?
Yeah, so for right now, we've got two different assets. We've got one located within Johnson City, Tennessee, and of course, that's just outside of Knoxville. So that's a good ways away from me. And then we've got another asset currently right in my backyard. So we just closed on that one back in December. And it is 68 units. It's a mobile home park. And we also have a development component within it. In which we're going to build out a mobile home park. We're going to add about another 150 lots to it.
Wow.
So there's currently 52 acres. 12 of the acres is already developed. It's the existing park currently. And we're going to build out the other 40 acres within the next couple of years.
Man, that is awesome. That sounds like a really solid business plan. How long have you been in the space for? I mean, that sounds like you got into mobile home parks, but not only that, you're already working on the development piece there. So how long have you been in the space?
So really, to be honest with you, within multifamily, I probably have about 3 years experience. My prior life to syndicating and multifamily and commercial real estate, I was in single family residential property. And so I actually got my start as a wholesaler. And I was doing tons of volume, bringing guys some really great opportunities. But I realized that I wasn't capturing any of this equity. I was just a transactional person and basically a glorified realtor. I was going after transaction, but I wasn't capturing any passive income, any cash flow. And after about 3 years, the lights came on, and I realized that I needed to become a buy and hold guy. I needed to create some passive income. And so I started looking into commercial real estate at that point.
And that is, I'm so happy to have you say that you evolved that way. I know what it's like. You do this hunt, eat, hunt, eat. Like, where's my next meal coming from? And then, it's nice to be able to get that passive income there. And what's cool about that is not only as a general partner you get that, but your investors are going to get that as well. Well, you're doing all the heavy lifting, your investors are getting that as well. But before we go over into how that dynamic works with when you're finding deals and you're raising capital for investors as a fantastic alternative to traditional stocks, IRAs, that type of thing, I want to hang out in the space of wholesaling. I speak with a lot of people who are new to real estate, and probably 70 to 80% of them are wholesaling. and they'll tell me I'm trying to wholesale a couple of deals, and then I'm going to get into multifamily. Can you get a little bit more specific about how you were able to make that jump from doing wholesaling into multifamily?
Yeah, so it was 100% education. And so that's the key to everything, to be honest with you. You can unlock all of life's secrets through education. And so if you get the right information, if you follow the right thought leaders, get around the right crowd, you can put two and two together and soon discover that, hey, this is the process. This is how it's done. And this is where I am currently and how I could bridge that gap. And so there's so many different ways to be able to get to an end goal. So there's people that start with tons of capital. There's people that start with no capital at all. As a matter of fact, there's a gentleman, he had two single family homes and he ventured into multifamily syndication. And now he's got a couple of $1 billion worth of real estate under management. And so he had no cash basically when he got started, just two single family homes. And so it's 100% education. It will get you and get your foot in the door. But from wholesaling, I absolutely love wholesaling. And the reason I say that is because it really gives you a great foundation. And when I say a great foundation, it shows you
Okay.
everything from how to network, how to locate a great opportunity, what a bad opportunity looks like, and it just kind of gives you each component that you need within real estate. And I to this day, I transfer a lot of those skills into my multifamily business.
Awesome. So if you had to go back and do it all over again, you wouldn't change anything. You would keep exactly where you were along that journey.
I wouldn't say that much.
Okay. Okay. Fair, fair.
Because I look at it like this. I didn't know what I now know. And what I now know is that you can leverage other people's money to be able to buy real estate, to be able to do unlimited amounts of deals.
Mhm.
And I didn't have the education back when I first got started with real estate. And so I I was initially thinking you had to have tons of capital to in order to be able to buy multi-million dollar properties, but through connecting with individuals that have access to capital, and if you have a skill set to be able to go and locate a great opportunity, then you can get into the game immediately.
I also love that. I also love that mindset as well. How did you get that education? So I once again talked to a lot of people. There's the University of YouTube. There's a lot of
Hmm.
information there.
Hmm.
But most people that get into syndicating don't. There's not enough information, and sometimes you even need some hand holding. So, how did you get into the syndication space?
So for me, it probably came from bigger pockets, listening to countless episodes of podcasts, and then that just transitioned into one thing after the next. And before I know it, I was listening to specialists, and that's something I highly recommend to a lot of people that I deal with and that I encounter is go after specialists. It's the same thing in the medical field. And so if you're going to have a heart surgery, you're gonna go to a heart surgeon. If you're gonna have a brain surgery, you're gonna go to a brain surgeon. So you want to find people that specialize in areas that you're really wanting to go after. And that's what took place with me. I started specializing and looking for specialists that were concentrating in the area that I really wanted to go in, and which was syndication. And so I started following a guy. He was an apartment syndicator, and I just started binging his content. And I followed the guy and listened to his podcast religiously for a couple of years. And before I knew it, I was starting to kind of be able to put the pieces together. And I joined his coaching program. And so it's definitely been a game changer, and getting connected to the right people is essential as well.
That's awesome. I was just telling somebody a little while ago. So I've been in the space for about 7 years. I'm a big believer in paying for coaching to accelerate your timeline. I mean, that's or you're compressing your timeline, huge. And it's kind of crazy to think, but I went back and I did the math, and I've actually spent a little over $100,000 on coaching over the
Hmm.
last 7 years. But I would not be where I'm at today had I not done that. I would still be struggling in some other area. And I even still today get additional coaching for whatever it is I'm trying to develop and grow in my business. So I do think that's an important part there. It's not for everybody, and that's okay too. So with that, I want to transition to there's a lot of people, and I was one of those people. I was very busy in my corporate job. I was raising a family. My when I got started, my son was 3, my wife was pregnant, and I did my first investment in real estate. It was an apartment complex, but I did it as a passive investor.
Hmm.
So there's a lot of people who are listening and maybe they didn't know. You wait, I can invest passively in an apartment complex. I can invest passively in a mobile home park.
Hmm.
Tell me more about that.
Yeah, so passive investments is definitely a great vehicle for individuals that they're busy and they have other things that are occupying their time. And so it provides a foot into the door, so to speak. And so you can easily get into an investment. You can get connected with experienced operators such as yourself, such as myself, such as other operators, without actually having to go and put the sweat in. If you have some liquidity, if you have some investment vehicles that you could roll over into some syndications and invest as an LP, in which there's quite a few different vehicles that's out there that you could leverage to pull cash out and put cash into syndications as a passive investor. And so it just provides a great opportunity for individuals to be able to get into some alternative investments. And that's something that employers, they don't do a really good job of giving their employees options on how to look at and look outside of the traditional stock market. There's so many different alternative vehicles, investment vehicles that you can get into that could provide their employees with better opportunities.
Yes. Amen. Amen to all of that. So I want to talk a little bit about some of those alternative investments strategies. So like you said, an employer, and there's nothing wrong with it. Okay. So we have to, I want to acknowledge if you're working a W-2 job and you've got a good job, most people aren't educated on how to invest. And like doctors, lawyers, attorneys, corporate executives, just because you're highly educated in one area does not mean there's a financial education that comes along with it.
Mhm.
Anytime I got a promotion in my corporate job, it's not like, hey, you're going to get more money. Let me teach you what to do with that. It doesn't happen. And that's an unfortunate thing that happens in our society. So the reality of it is there are other types of investments. We all hear about crypto, things like that. There's oil and gas. But when I learned I could invest in something like a mobile home park or an apartment complex, I was like, ooh, tell me more.
Yeah.
Um, so there's a lot of alternative investments out there. Yes, I think that people should be able to take advantage of those, and they can, but one of the challenges is, and for me, like I wanted to get more into stocks, and I was like, ooh, let me figure that out. I never could figure out how to like be a good day trader. Like it just never worked for me.
Mhm.
Um, but most of, when I was in corporate America, I didn't have the time. I didn't have the time to go figure out how to do this other type of investment or be confident in this other type of alternative investment. And that's where, like you said, if you find owner operators who've been doing it for a while, they've got the track record that can prove it. Um, what are some of the advantages that you see investing in something like multifamily, whether it's mobile home parks or apartments, as an alternative investments? Because you can stack all these alternative investments up, but why do you prefer multifamily opposed to those other types of alternatives?
Yeah, so it's just really resilient. And so it's showed a lot of durability during high interest rates, even in downturns, which we experienced back in 2008. Here within 22, that was more inflation, but multifamily and mobile home parks, they stayed resilient. I mean, and they still perform. And so that to me provides a shelter for finances, for investments, because you want something that's going to hold up under some duress. And
Hmm.
so if you can remain at an extremely high occupancy rate, that shows that you're in a great investment. And if your investment isn't taking huge dips and doing a lot of different things that's gonna impact your investment, that is a safe investment to be in. And so mobile home parks, you don't find those huge dips. You don't find a ton of people just walking away from their mobile home. And that's why we love mobile home parks
Hmm.
is you have tenants that what we call are sticky. You have individuals when they get into a property, they're going to stay there. The average person and tenant that lives within a mobile home, they're going to be there for 3 to 10 years. So what that tells us is that we have a great investment because we're not going to have huge turnover. We're not going to have an occupancy issue and vacancy. That is an enemy of an investor. You don't want your property to not, you don't want your property to have huge vacancy issues because that's income that's not coming in, and we want to have our occupancy up to easily 90% or 95%. And mobile home parks, they provide that. Multifamily apartments, they provide that as well. So we love multifamily apartments, we love multifamily mobile home parks as well.
How long did you say people normally stay in the mobile home park? Three
Yeah,
to
so
five years?
the average tenant stays between 3 to 10 years. So
Three to
we
10 years.
have we have individuals within our mobile home park that have been there 20 years. And so that
Wow.
and that's really common. And the reason why it's so common is because mobile home parks, the individuals that live within the home, they treat them as a single family home because they're not connected like the multifamily apartments. Multifamily
Yeah,
apartments,
yeah, yeah.
you've got people next door to you, underneath you, on top of you, but mobile home parks,
You're
you've
sharing
got your
walls and you're not
exactly.
okay. All right.
Exactly. Yeah, but mobile home parks, you don't have anyone next to you. You've got your own yard. You can have it fenced in if that's in place currently, but you don't have people connected to you. And so you have that pride of ownership because you actually, and a lot of the tenants and our model that we operate within our mobile home parks, we don't want to own the homes. We want the tenants to own their homes and maintain and take care of all those expenses. And another beautiful thing about mobile homes or mobile home parks are is that the expense ratio on it is somewhere between 30 to 45%, where the traditional multifamily apartments, the expense ratio on that is on average 40 to 55%, depending on
Mhm.
if it's a newer asset, it can be a little bit lower, but generally the rule of thumb is right at about 40 to 50% somewhere.
If you're enjoying the podcast and want to fast track your way to becoming a full time real estate entrepreneur, then join the Multifamily Mastery Hub on School. You'll get access to our educational course library, live trainings, live interviews, and a community dedicated to helping you succeed. Visit school.com/multifamily mastery hub. That's SKOOL.com/multifamily mastery hub and fast track your way to becoming a full-time real estate entrepreneur today.
I'm learning so much right now. I'm thinking, ooh, I should change my investment strategy. This is great stuff. I love it. So operating expense ratio. A lot of people probably don't know what that is. Can you explain that really quick and why that's an advantage? Like that's a lot because you're going to make more money, but you're going to cash flow a lot more probably if you have a lower operating expense ratio. So explain to us what that is.
Yeah, so operation expense ratio is basically how much your expenses are. And so everything is based off of income. Whenever you get into commercial real estate, they're going to value it just the same way they would value another business. And it's 100% driven off the income. So off of the NOI. So the NOI is figured from the income that you have coming in through rents and other type of income that you've created. You may have carports that you're offering, and you may have storage units that you're able to charge. And so that's all income. Now you have to subtract that, subtract from the income your expenses, and the expenses is going to be operational expenses. So these are going to be common expenses that are taking place within the property. And so if it's a multifamily apartment, you're going to have, water or trash or lights, gas, those type of expenses that usually come with owning any type of investment property. And so you would take the income that you have coming in, the operational expenses that take place on a month to month basis, and you would subtract that, and what's left is your NOI. And so that provides the value of your property. And so if you've got a lower expense ratio, that's going to make your NOI that much larger because you don't have that many expenses. And so you want to have the lowest amount of operational expenses that you can possibly have. And reason being is because you want your NOI to be as large as you possibly can make it, because it increases the value of your property.
Yeah, yeah, no, I love it. So bottom line is, if you have less expenses, you've got more money in your pocket. I think that's pretty much where it works out.
There you go.
And you're spot on there, right? I underwrite a lot of multifamily deals, and if I can get it under 50%, I'm happy. Like, I'm really happy to get it under 50%. But for you to say mobile home parks is 30 to 40%, I'm like, that's fantastic news. Like you said, they're going to be valued off of the net operating income and the cap rate that's in the space, and so you've got like tens of thousands of dollars, depending on the size of the mobile home park, tens to thousands, if not hundreds of thousands of dollars in addition you're making every year. That's a huge valuation change there.
Exactly.
What is it about mobile home parks? What is so much less expensive about a mobile home park than it is about apartment complexes?
Yeah, so I mean, it goes all the way down to management. And so we can hire a manager within our park we could pay them just free rent. And so if our rent is $400, we could pay a manager that. And we try to reach into the park and hire within. And a lot of tenants within the park, they're excited just to be the manager. And so that saves on a ton of costs that comes with having to pay a traditional 3% rate, in which traditional and typical managers will demand with them multifamily apartments. And so you can save on the management piece. And then you just don't have the repairs and maintenance bills that you have within multifamily apartments, because if you're transferring the ownership of the homes over to the tenants, well, that expense that you would have had to incur or have occur with you, it now falls on the tenant to maintain their own homes. And so we don't really have huge repairs and maintenance bills. And so that's the name of the game. And so we're also passing off utilities. We're billing back, water, et cetera, to the tenants as well.
Man, that's you're opening my eyes to a lot of things right now. This is fantastic, because I'm literally looking at my underwriting. I'm thinking, okay, so repair and maintenance, that's on the tenant resident. I guess it's more of a resident in this case. That's on the resident. And then if you've got someone who's on the property doing it, you give them free rent. So you no longer have salaries that you're paying, right? You don't have a property management fee. Your repair and maintenance almost goes away. You're kind of left with some, and your utilities, you're billing back. And then maybe some contract services. What about the property tax part? Like, who pays that?
Yeah, so that's 100% ownership. So that will fall on you. And that's the exact same thing that you would have impact you as well as a multifamily apartment owner. So you're going to have property tax, you're going to have to carry insurance. But even insurance is another thing that is not as high with mobile home parks as compared to multifamily apartments. And so it's a lot of great benefits that comes with mobile home park investing.
Awesome. What do the returns look like for your passive investors on these mobile home parks?
So we operate in a couple of different ways. So we can structure it at 70/30. We can structure it as 65/35. It's 100% open to negotiation, but we usually offer somewhere right around a 8% pref, 7% pref, and that's what we try to hit. That's what we try to achieve. And really, to be honest with you, each one of the properties that I'm lead on, or I'm one of the GPs on as of current, we're outperforming the pro forma. So our business plan is ahead of schedule. As a matter of fact, our property that's located within Johnson City, Tennessee, we're hitting year 5 projections in year 3. And so we're well ahead of schedule. And the new property that we've recently taken over, we're trying to get it turned around, but there's a lot of upside and there's a lot of great things that's coming.
Awesome. That is a fantastic return. So your investors, I'm sure, very, very, very happy with that. One thing I've learned in apartment investing, we'll call it multifamily. We'll broaden that. It's not all rainbows and unicorns, right? It
Mhm.
is not all rainbows and unicorns. What are some of the common problems you see with new investors that are getting started in this multifamily space?
Yeah, so a lot of people that's jumping into the space, they think that it's just going to be unlimited amounts of deals. It's going to be super easy, that it's really going to work out for them to get wealthy extremely fast. And that's really not the path that multifamily or commercial real estate is going to send you down. Most of the time, you're going to have to work extremely hard for maybe, I want to say 3 to 5 years, to be honest with you. If you can create a great foundation, learn the skills, learn how to underwrite, network, get connected with the right people, and also build and cultivate relationships, that's what's going to be what really helps you build over the long haul. Now, you can make a lot of cash over 5, 10, 15, 20-year span, but it's not just going to be something that occurs overnight.
Yeah, it's not a get quick rich kind of a thing, but there's a lot of security in it, and you're far outperforming what you would see traditionally in the stock market because so you said you're generally giving like a 8+ pref return, preferred returns to anybody investing passively.
Hmm.
So let's do a side by side comparison really quick. The stock market is 8% when it's going good. Sometimes it's better, sometimes it's worse, but I think if you average it out, I think it's 8%. So you're giving an 8% return cash flow.
Hmm.
You haven't even sold the property and giving them a return on the back end, right?
Right.
So you're going to hit somewhere north of probably 100 per, you're probably going to go north of 100% total return in what, 3 to 5 years? Is that your
Yeah,
plan?
that's what we're looking at as of right now. And then, I'm saying the 8% pref, but when we're underwriting some of these properties, some of the investments that we're looking at, it's penciling out to be 10% cash on cash. And so we just try to stay real conservative about things.
Mhm.
And when we're looking at the IRR on it, it's easy to hit mobile home parks somewhere at around 16 to 20% IRRs. And so there's some great numbers to be achieved within mobile home park investing. And then I'm also, with my background within wholesaling, I'm attempting to get direct to seller with a lot of these investments. And so when you get direct to seller with just eliminating the broker, sometimes that can give you a better opportunity to be able to have and achieve better numbers, even on the multifamily apartment side. And so that's something that I'm really looking to go deep on.
Man, that's awesome. Um, Another problem I know that happens is once again, a lot of these conversations I have, people that the couple of things is how do I find deals and analyze them, and then the other one is how do I pay for this thing? And so there's the funding, there's the capital raising piece. And so people come in, a lot of people I talk to about the multifamily space, they're thinking more traditional, like single family, like how can I create a finance this? And they didn't even know that they could raise capital on it. So, what has your experience been like raising capital? Easy, hard? What was that like for you?
To be completely transparent with you, it's been difficult for me. And so I just didn't really have the network to be able to have a lot of passive investors jump into my deals. But what I did have was access to a ton of individuals that was able to raise capital. And so that provided me with a great opportunity to be able to fund any deal that I run across. And so if you don't have the passive investors to be able to jump into your deals, then the next best thing is to have access to capital raisers. Have relationships with individuals that can raise capital. And in each of my two syndications, I've had a partner bring the majority of the cash to the tune of $1 million and 600,000 in another guy brought in another 300 grand. And so we just never had trouble funding the deal. And so you always want to get connected with passive investors or either capital raisers.
So, with that, would you say it's a team sport? You're not in it doing
100%.
okay, yeah, you're not doing it by yourself. It's a team sport. Who are the people that you need on your team?
So the people that you need on your team is you're going to need an attorney, syndication attorney. You're I like a mentor also. And so whether he's going to hold your hand every step of the way, or if he's just going to give you a guideline, if he's going to give you a template, put you in the room with individuals that will help you get deals to the finish line, help you get educated, put you one step closer to your end goal, get a mentor. I really think that has helped me and put me on the path that I'm on as of today. And you need to get connected with capital raisers. You need to also be building relationships with individuals that can invest passively with you. And you also need to have people that are experienced. So KPs, a person that has closed on syndications and can be a team member that you can locate great opportunities and partner with them, leverage their track record, leverage their background to help you be able to make sure that you're going to execute the business plan once you do get one of these large assets closed.
Yeah, absolutely. I think you hit on all the key players right there. It is very much a team sport. I think a lot of people think the I'm going to go it alone. I'm just going to make it happen by myself. And I think very quickly you end up hitting a lot of roadblocks. I will tell you, for me, when I started in the apartment investing space, so once I went from passive to I'm going to be a general partner, I made the mistake of thinking I'm going to do as many of these jobs as I can, as many of these roles as I can. And I really held myself back a lot. Rather than by saying, this is my superpower, this is my strength, this is my swim lane, let me go network with other people and find those complementary
Mhm.
skills. I didn't do that well. I didn't do it right the first time. And then I had to learn to go back and find partners. But you don't want to find just anybody, right, Eric?
That's correct. Yeah. No, you need to vet everyone that you're going to get into an investment with. And the reason I say that is because you're going to be into this investment from 2 to 5 years, depending on what the economy's doing when you go to exit the property. It may be 7 years, it could be 10. Nonetheless, you want to know who the person is that you're going to be in this investment with for this prolonged period of time. And so, and I hate to say it, but I've seen and heard of partnerships fail because they didn't vet the person that they got into the investment with carefully. And some people have found themselves dealing with individuals that do fraudulent things. They just weren't very ethical. And so you want to spend a little time doing diligence on the person that you're going to get into an investment with.
Yeah, absolutely. You're married to that person, whether you like it or not. And when things get tough, I don't know if you've been through it yet, Eric, but I have. When things get tough, you want partners who are going to roll up their sleeves and are going to show up. Um,
Mhm.
I've been on some very tough phone calls with partners. Not that we were confrontational with each other, but just what do we do? And there's a lot of emotions that come into play. And if you're with some people, they'll just turn and run the other way, and you don't want that. So, and that is not the case. So I don't want to scare people and be like, oh no, I'm never doing this. Like, but the reality of it is, like Eric's saying, like I'm saying, spend a little bit of time. Don't just get into a deal to get into a deal. Make sure it's the right deal. Make sure it's the right partners. And if nothing else, like hop on a Zoom call with them. Try to have
Mhm.
dinner with them, right? Like get to know them a little bit and their personality, because you're gonna get to see them on their good days, their bad days. And you want someone who, when you're struggling a little bit, will bring you up, and you can return the favor. Like if they're struggling a little bit, you can bring them up. It is so much a team sport, and these people will be like family because you spend so much time working with them.
Mhm.
Eric, we covered a lot of ground today. What advice, what are the top three things that you would share with someone who's getting started in this space? And so we're gonna look at this two ways. One is a person who's like, ooh, I want to go do some deals. I want to be active. I want to go find the deals. I want to be what we call a general partner. And then the other one is top three things you would suggest for somebody who wants to be a passive investor. Maybe they're listening and they're like, man, if I could get that much on my money, like I would love to do that. So what advice would you have for someone who wants to be a general partner? Top three things.
Yeah, so the top three is you have to network. And so networking is a huge portion of this business. And so that's something that I didn't really recognize initially when I first got in. But it is absolutely key. If you're introverted, I'm somewhat introverted, to be honest with you. And so it can get a little grueling after you do some events and you're in person. You have to figure out what works best for you, but networking is going to be a huge piece. Get a coach. Get a coach. I stand behind that. Getting a coach, it can get your foot in the door into a lot of rooms that they may have welcomed you in, but you just get a extra layer of credibility 100% due to the coach and the group that you're a part of. And so it's paying me dividends. I joined a mastermind about 3 years ago, and it's got me in a room with some really great people, some people that I'm in two syndications with right now that the person may had worked with me, but since I had the same credibility or the credentials as they had, they welcomed me in just that much more. And I would also say, learn how to underwrite. You have to learn how to underwrite. If a person don't know how to underwrite, it's going to be a turbulent investment career because you're not going to be able to spot great opportunities from bad opportunities, and you'll be able to see the story of an asset by simply looking at the numbers and being able to identify where there's some opportunity within it, or if there's any opportunity at all. And so really, really go deep. Go deep into underwriting, spend some time there, and you'll have some great results.
I think it's fantastic advice. And then for the people who are just want to be a passive investor, quick tips, like how do they get started in that?
Yeah, so I would recommend underwriting as well. And so
Okay.
you want to make sure that you are educated enough to be able to look at a spreadsheet. When an investor presents it before you, you want to be able to look at that spreadsheet. You don't have to necessarily master the spreadsheet itself with the different tabs and how it functions, but there's key indicators within that spreadsheet that you're going to be able to go and look at. And so you'll be able to go look at the exit cap rate to see where the investor is projecting the investment cap rate will be in the end. That's going to tell a lot. And you want to make sure that the person that is pitching you and trying to get you to invest within their deal is not looking for some type of pie in the sky cap rate in a really turbulent market. We don't really know where an investment is going to be in 5 years, but if a person's staying conservative, that's a great sign. And some other tips, do some diligence on a person. Google searches can tell you a lot about a person. So type in a person's name and just put scams or bankruptcy or fraud. Put next to that person's name and see if there's any bad media on them. And that will help you shortcut a lot of issues because you don't really want to get into an investment. If a person has committed fraud in the past, I'm all about giving second chances and looking to for redemption stories, all that. But you have to keep your guards up because you don't want to end up into some type of IRS audit because you got into an investment with someone that the red flags were standing out. And I would say those are probably my two standouts.
Gotcha. Yeah, I agree. The underwriting thing, I think it's fine. It's hard to get passive investors who might want to learn the underwriting. I was having a conversation with someone the other day about passive investing, and he said, I hate the term passive investing because they should not be passive. They should take the time to learn the asset. They might not have to be able to learn it overnight, but it's an investment nonetheless. So he's really big on educating his investors, which I totally agree with. So I think that's sound, solid advice for anybody who's going to be doing passive investing. Take the time to educate yourself. Ask questions. I know there's the know, like, and trust, but just because you know me, I'm a good guy, you should still educate yourself on some of the things, just get an overview of the underwriting, and you should always be able to ask for that and get it. I will, there was a group I met one time and they had sent me a deal and I said, can you share with me your underwriting? And the answer was no.
Huh?
To me, that was like a hard pass. Like, nope.
Red
They said, no,
flag.
no one's ever
Uh-huh.
asked for that. I'm like, well, you're telling me that these are your numbers, but how can I verify that? And they're like, no, we don't typically share our underwriting. And I was like, okay, well, then that's a hard pass for me. And I think it should be a hard pass for any passive investor. You should be able to ask for any of the underwriting. I've underwritten deals myself. I've said, can you share your underwriting with me? Send me your T12, your rent roll, your CoStar report. Like, I'm going to underwrite this deal myself. I don't think everybody should do that to that
Hmm.
extent. But if you
Hmm.
if you know it, you should be able to ask that, and your GP should share that. Absolutely, they should be able to share that with you.
Yeah.
Eric, I've really enjoyed our time here. What's next for you guys in your apartment investing and journey, or your multifamily investing journey?
Yeah, so for me is getting my first multifamily apartment complex, taking that deal down. So I've been tunnel vision, going after it. I got really close. We were in the final runs for a 152 unit apartment complex, but we decided to walk in the end on it. It was a C asset in a C class area. And so it was also in at the tail end of 22. And so raising capital at that point for C assets, it was a challenge. So that's what's next for me, getting into apartments and closing my first syndication there. And then just scaling. I want to own a couple of thousand units before it's over with. And so I've got the team around me that we can do it and looking forward to it.
Awesome, man. I have complete faith you're going to do it. And I think now is a fantastic time to be getting in the game for apartment investing. The property values have come down quite a bit. I don't know that we're at the bottom of the market, but I think anybody who's waiting to time it is probably going to miss out on some good opportunities. So I think you guys are in a great spot. Eric, if somebody wants to get a hold of you, learn more about you and your investment, and potentially invest with you, what's the best way for them to get a hold of you?
Yeah, so if they go to my website, it's Moonlight CRE. So moon like the planet, light, LIGHT CRE.com. You'll be able to find all my content, my podcast, in which I also have a podcast. It's the Moonlight Real Estate Side Hustle and Syndication Show. You'll be able to find my Connect with Me, Invest with Me page, and you can send me an email and we can take it from there and see if we'll be a good fit.
Awesome. Eric, thank you so much. I've really enjoyed our time together. I look forward to talking to you again and maybe doing some business together in the future. So, any closing thoughts?
Well, Stephen, yeah, thanks for having me. Also, it's been a pleasure just kind of seeing you from afar and seeing the trajectory that you're on. That's absolutely amazing. And I'd love to get into a deal with you and talk down the road. And guys, you're definitely in good hands with Stephen. He's knowledgeable, he's in the space, and he's doing deals. So that's all you can ask for a person. But yeah, until the next time, Stephen, love to come back.
Thanks. That is not a paid promotion, by the way. Going on the record. I appreciate it. I appreciate it, Eric. I'm your host, Stephen Lee Thomas, and I'll see you guys in the next episode.
Thanks for tuning in to the Stephen Lee Thomas Show today. And if you found value in today's episode, then I have a favor to ask you. Please share it with friends, family, and anyone who might benefit from the insights we shared today. Also, don't forget to subscribe and leave a review if you enjoyed the show. And if you aren't already part of our school community, then head on over to school.com/multifamily mastery hub and join today. And again, thanks for tuning in, and I look forward to connecting with you in our school community.